Today, we're zeroing in on 7 cheap dividend stocks offering both value and price upside. Let's get started. Chris, thanks for joining me again today. We are covering 7 cheap dividend stocks offering value and price upside. Now, the other day, we had just discussed some must-buy stocks that were under $20. And with that, we did bring up the conversation that the price of a stock and the value of a stock are frequently different. So that, of course, is important to remember as we talk today, that you don't just judge a stock by its price. But let's start with this, Chris. What are the key factors to consider when we're looking for dividend stocks that are considered cheap?
Right. Well, first of all, thanks for having me back, Lacey. When you're looking for a cheap dividend stock, and for the purposes of this video, we're talking about cheap stocks that are trading for $20 or less, you're really not using anything that's different from the process you'd use to find a good dividend stock, period. It's going to come down to, number one, earnings growth. You want to see a company that's delivering consistent, not only revenue that's growing, but you want to see them delivering earnings that are growing, because that's what's going to allow them to do the second part, which is have a consistent dividend, and ideally a dividend that's growing. And then I think the third thing that you would want to look for is a company that the dividend payout ratio is not too excessive. Generally speaking, some dividend investors say they want that ratio to be under 50%, but it can be over 50% depending on the sector that they're in and the type of business that they have. One thing that's really nice is that MarketBeat has a tool that allows investors to find cheap dividend stocks. Let me show that to you. So you can see here, it's a list of cheap dividend stocks. And like a lot of these pages that MarketBeat has, there's a screening component to it, so you can screen by sector. So for example, if I only wanted to look at stocks in the computer and technology sector, I can click on that. If I only wanted to look for stocks that are large cap, I can do that. And then of course you have the type of equity it is, by market rank, which is a tool that MarketBeat uses to rank stocks in terms of things that investors might be looking for. You also have media sentiment and also analyst consensus. So I could say, well, I only want to look at stocks that have a buy or maybe a hold rating, and it'll just update that for you right there. So that's one thing that you can do to help you sort out lists of dividend stocks that you might be looking for.
Great. Well, let's take a look at the list that you have for us, Chris. First, you mentioned Gilead Sciences. Yeah. Now, the biotechnology sector isn't typically associated with dividend stocks. So What makes Gilead stand out in this category then?
So when you're looking for a company like Gilead as a dividend stock, the one thing that you're going to want to be looking for is their pipeline. As we know with companies such as AbbVie, Pfizer, these companies bring products to market, but then they also are subject to patent cliff. That means at a certain point, they lose their exclusivity in selling their drugs in the United States and or Europe, and the generic equivalents come online. So you always want to look for companies that have a strong pipeline, which means they're always going to be bringing new products to market to help make up for that revenue and earnings. In the case of Gilead, they've got a long pipeline. They've got about 10 products that analysts believe are going to be in the market by 2030. And these products are in some areas that are going to be some of the more closely watched sectors in the next decade. So that's really where I was looking at Gilead and saying it's one to watch, because you are getting a dividend yield, and that's something that a lot of these biotechnology companies don't offer you.
Secure your financial future with MarketBeat's exclusive report, 7 Stocks to Buy and Hold Forever. Dive into the insights of proven winners for income investors as our list reveals why these 7 stocks boast very promising long-term outlooks. Don't miss out on the opportunity to grow your wealth with confidence. Download this free report today and start building a portfolio that stands the test of time. Okay, well, you also have Starbucks on this
Mhm.
list, Chris. Starbucks showed resilience through pricing power, despite commodity price hikes that we saw. But how important is the company's ability to manage costs and maintain margins for dividend investors?
Well, it's crucial, Lacey. And, pricing power only goes so far. And Starbucks is showing that they're working both ends of it. Yes, they are increasing their prices a little bit, as anybody that's gone to Starbucks knows, but they're also working on the back end to make sure they're containing their costs so that that earnings growth is sustainable. That's a key word here, is it's got to be sustainable as we go through this cycle where companies are trying to manage through inflation just as consumers are trying to manage through it. So Starbucks has shown the ability to do that, and their stock actually it's been going down here still in the short term, but I think that's more of being affected by the overall commodity news. That cycle may turn around, and when it does, I think Starbucks is going to be a great opportunity, and you can buy it now at a lower price and still get that dividend.
Now, Chris, can you discuss the
Mhm.
impact of macroeconomics for us? Those factors on sectors like dry goods, shipping, and mining, maybe as we are seeing with Diana Shipping and Vale.
Yeah, so when I was writing this article last week, I saw Diana Shipping pop up on the screener, and I took a closer look at it because dry goods shipping was already being impacted by what's going on in the Middle East. And now with the Baltimore Bridge uh, tragedy and what's going to take to open the port of Baltimore and rerouting shipping there, I think this is a time where if you can find companies like Diana Shipping that are trading at a discount, you're going to want to look at them. It's a short-term play, but still it's something that especially traders may want to be looking at. And the same is true of Vale, although Vale may be a little bit more of a longer-term play. Vale specializes in iron ore, and iron ore is things that you need. It's the primary component of steel, and we're going to need steel. Obviously, again, I point to the Baltimore Bridge. That's got to be rebuilt. That's a project that's going to require a lot of steel to begin with. But we're also still infrastructure money is still flowing into the economy. Steel's a big part of that. I just think there's a probably a several year tailwind going on for iron, and Vale is one of the leading miners of that.
Okay, let's take a look at another one here. Universal Health
Yeah.
Realty Income Trust has been increasing its dividend for 38 consecutive years. So, what does this tell us about the company's financial health and the REIT sector's outlook as a whole?
Yeah, it was kind of one of those. It's one of those stocks that kind of surprises you because we keep hearing about how disastrous it is in the commercial real estate market. But I think the story that you really need to think about with Universal Health Realty Income is they've increased their dividend, like you said, for 35 years, and if that's we sometimes just throw out numbers like that and we don't put that in context. You look at everything that's gone on in the economy in those 35 years. That means that's through 9/11, that's through the financial crisis, that's through the dot-com bubble, all of that. And this company just kept on delivering, not only paying a dividend, but increasing the dividend over that time. That's just something that, if you owned the stock 35 years ago and you still own it today, you've been benefiting from that compounding effect as they've been increasing their dividend for 35 years.
Okay, now considering BigFive Sporting Goods, they cut
Mhm.
its dividend twice. So,
Yeah.
what signals should investors watch for that might indicate a dividend stock is becoming maybe less attractive?
Yeah, so I've been harping on the fact that you're looking ideally for companies that are growing their dividend. So people might
Right.
say, okay, you're being hypocritical to put a company in here that's cut their dividend. But one of the things that stood out to me with BigFive is the company did cut their dividend, and they didn't just cut it once, they cut it twice. But they did so with the idea of cleaning up their balance sheet, and they've done that. And this company just looks right now, they're trading at penny stock levels. It kind of looks one of those situations where it's kind of so good, so bad, I should say, that it's probably good. Ideally, you would rather see the company not having had cut their dividends, but if they did cut their dividends, you like to see that they've used it for some productive purpose, and now the business looks better. It looks in fundamentally better shape, and as other companies have shown, like Occidental Petroleum, you can catch up with those dividend payments relatively quickly, but you have to get your balance sheet in good shape.
Mhm. All right, let's take a look at York Water. They have an impressive history of uninterrupted dividends. How critical, Chris, we've kind of talking about this right now, but is dividend consistency when we're evaluating the long-term value of a stock?
Yeah, well, so this plays right with what we were talking about with Realty Income. It's the same thing with York Water. York Water's got a, it's a rather boring business model because what they're doing is they act as a water utility. They also do some servicing for the water industry. It's not a sexy stock. It's not going to be something that's going to be growing like you would see out of an Nvidia or something like that. What it can offer you is that, again, it's that consistent dividend growth year over year, and that allows you to benefit from that compounding effect that dividends have. It's why a lot of dividend investors love investing in dividend stocks.
All right, well, let's pull this all together here, Chris. Given the long-term perspective needed for dividend investing, do you have any final tips for investors to remain patient and disciplined with this?
Yeah, what I would always say is, I believe that dividend investing shouldn't take up your whole portfolio, but I think there's a place in every investor's portfolio for dividend stocks. I kind of consider this a good parking place. You can have a lot of really good anchor stocks that you can just know they're kind of sleep easy at night stocks. You just collect that passive income that comes from the dividends. And as you get opportunities when these stocks go on sale, you can add to your position, which then just adds to the compounding effect. Again, doesn't need to be a heavy part of every investor's portfolio, but I think every investor should be paying some attention to dividend paying stocks.
All right, well, we hope everyone enjoyed today's conversation. Successful dividend investing does require patient and strategic approach. So don't forget that MarketBeat has several resources available to help you out. Leave us a comment down below if you have any questions at all. Otherwise, we'll be right back here at MarketBeat with more. We'll talk soon.